California experienced a very unusual May and June this year. Southern California is subject to some of the coldest daytime temperatures in the last 40 years, which is far below our normal. The housing market has experienced a similar cold front where it seems covered in a thick fog that just won't clear. Let's talk about it. Many people would think that the biggest impact would be in demand, but if you watch this show enough, you'll know that the supply of homes to purchase has suffered the largest hit. The inventory started off in January 46% below the 3-year average before COVID and has failed to rise much at all. Today we are at 63% lower than that average, sitting at just 2,475 homes for sale compared to the 6,753 homes for sale when Orange County felt normal. Today's level is the lowest inventory for a start to August since tracking began back in 2004, and it's even slightly lower than it was in 2021. The inventory has been at all-time lows, not because of unbelievable hot purchase demand, but it's more of a result from the lack of homeowners willing to relinquish their low, fixed-rate monthly mortgage payments. According to Freddie Mac's primary mortgage market survey, mortgage rates climbed back up to 6.9% as of August 3rd. Since 87% of Californians with a mortgage are enjoying a fixed rate at or below 5%, homeowners are reluctant to sell, which who blames them? The lack of available homes has impacted everything from supply to demand to closed sales. Demand has been squeezed by both sky-high mortgage rates and a lack of available homes to purchase. This 1-2 punch has resulted in demand readings at record low levels all year. From January through July, demand has remained at its lowest level since tracking began in 2004. Current demand is at 1,580 pending sales, which is down 13% compared to last year and down 40% compared to the 3-year average prior to COVID. In terms of closed units, housing is experiencing a recession. Yet in terms of home values, the homeowner is doing quite well. According to Freddie Mac's Home Price Index, LA and OC metro areas dropped 7% from its all-time peak in May of 2022 through December of 2022. But since it bottomed out in December, home values have risen 7% through June and appear poised to continue to climb through 2023 due to the scarcity of homes for sale. Many wonder when this will pass and what is the solution. When will homeowners sell? When will the active listing inventory rise? When will the market experience higher demand and more closed sales? In my opinion, higher mortgage rates is not going to be the answer. If rates continue to go up, we will have more of this hunkering down trend and we'll get less and less inventory on the market. I think in order to start solving our inventory crisis, there needs to be a modernization and increase of the capital gains tax exemption. Currently, it's at $250,000 for a single person and $500,000 for a married couple. And the last time those were updated was in 1997, and a lot has changed since then. Solution number 2, I think, would be to lower the interest rates. I think more homeowners would opt to sell if rates were below 6%. Demand would rise, and so would the number of closed sales. But it's not going to change overnight. I think it's going to take a while to see that inventory rise, because as rates drop and demand rises, newly listed homes would sell really quickly, making it challenging for the supply number to rise. The good news will be that the recession in units will fade as more buyers and sellers tap into the housing market. Okay, last piece here. Let's take a look at the days on market for Orange County. As you can see, anything under 2 million is selling in 53 days or less, and it's a hot seller's market. In the $2 to $4 million range, we're looking at 76 days on the market, which is still a seller's market. And in the 4 to 6 million and the 6 million and above ranges, you're looking at 150 to 300 days on the market, which tends to be a buyer's market. However, these market times have been decreasing these last few weeks, so this category might be picking up, and we'll monitor it closely. So that's it for today's episode. I appreciate you guys watching and taking the time to learn what's going on in the housing market. If you have any questions, contact us anywhere and we'd be happy to help you out. I'll see you guys in the next episode.